All right, DeLynn, are you ready for this?
Sure. I don't know.
What do boobs, bellies, and mortgage rates all have in common right now?
Excuse me?
I'll tell you what they have in common. They're all dropping. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I'm DeLynn Gaston. Thank you so much for joining us. So, not talking about boobs and bellies.
I don't know why I said that.
But
sometimes I open my mouth.
We never know what's going to come out of his mouth.
But you know what? It is appropriate. It's just the natural course of life.
It is, and that stuff started. But I'd rather not think about that right now, if you don't mind.
I know. Hey, we got.
But rates are dropping.
They are dropping, and you know what? It has a huge impact on the industry, and we're gonna talk more about what's going on with rates and why it's happening.
I know.
And we live in a, well, I don't want to get into it now.
Volatile society right now.
Volatile?
Yes.
Yeah.
I think that's a really good choice of words.
I think it is. I think it's a safe word. You chose your words carefully, unlike me.
I did. Yeah, exactly.
No, but there's a lot going on in the industry. And, I think the consensus is there's a little bit, maybe a slowdown in the purchase market, which is sometimes normal cycle this time of year, at least in our region in Florida. I think that a lot of the agents say, seeing a slowdown, not seeing a big increase in inventory right now. Mm-hmm. So it's not like there's an abundance of listings, but the active buyers right now seem to be minimal.
I know, it's funny. There. I think they all, as soon as school was out, everybody went on vacation at the same time.
Yeah, they did. But
they all left.
Nonetheless, with rates where they are,
mm-hmm.
and where the market where it is, still a great time, great opportunity for people to get in. So
and you guys all know that. So one of the things that actually we wanted to touch back on, so we got a lot of feedback. A couple of weeks ago, we did a show about the difference between pre-approval and pre-qualification.
Yeah, so
a lot of questions about that and such.
So let's do the Reader's Digest on pre-qual versus pre-approval.
Yeah. Yep. So
Reader's Digest version is one is good, one is better. There's my version.
And that's good. that is actually the great way of putting it. Pre-qualification.
Are you capable of doing a Reader's Digest version of this?
No, you do the Reader's Digest version.
Because the show will be over and she'll be re-explaining our last show, right?
Stop.
I'm sorry, you're very detail oriented, unlike me.
I'm
like matter of fact. Here it is. All right, pre-qual is we run the numbers. We say, yep, hello, on the phone. We run the numbers. We look at their debt ratio. We calculate their income based on information they supply to us. We base their debt based on what they're telling us. And that's simple layman's terms on a pre-qual. So based on the numbers they supplied and what they told us, they are pre-qualified to buy.
Right.
Okay. Pre-approval is they went ahead and sent us all those documents that we needed, the bank statements, verifying they had the assets they said to close, because and the pay stubs and the tax returns, so we can dig further and see, because sometimes people don't tell you about the 1099 business, the side business
really?
that they dig right off on, or they forgot to tell you about child support, or there's so many things that come up, or how about a mortgage note on it, they had down payment assistance, and it becomes a demand feature if they move out of that property. Little major things like that, and they don't have the money to cover that, and all of a sudden, boom. Or they owed money to the IRS, once, and they didn't tell us about it, and that showed up on their tax return that there was money they owed, and so they have another payment that doesn't report on their credit. So a lot of things fall into that.
Right. So basically,
pre-approval.
we really do try and ask as many questions up front. We try and ask about the IRS and the child support and the whatever, alimony or something like that. We try and ask all of those questions to get that stuff up front in the pre-qualification time so that nobody's wasting a lot of their time. But sometimes people either don't remember it, don't think about it, don't think it. Here's the big one. Oh, that comes right out of my paycheck, so that doesn't count.
Well, let's face it.
It counts.
I'm going to tell you what it is. Buyers are liars. It's the truth in every industry. And they don't mean to be liars.
I was just going to say, it's just that
It's
they're
not
uneducated.
intentional.
That's the purpose
They
of this
don't know
show.
that it matters. Yeah, and they want to tell you about,
Right.
they want to tell you about their electric bill.
I know.
And their cell phone payment that
Or
we
that-
don't care about.
The 3 inquiries on their credit report that really doesn't make
You were on that call.
a lot of
I'm glad you
difference.
get to sit there and laugh. And child screaming in the background. Yeah, you wouldn't believe what our life is like a normal day. Anyway, so let's talk about how much do I qualify for? That's what people want to know.
Right. That's what I was going to say.
Let's get in meat and potatoes.
One
of
of the
that.
main questions that we
While
did
you
get.
do this show, I'm going to go to the bathroom.
One of the main questions that we did get is about how much they qualify for. So it's not an exact science. I try and explain this to the realtors and to the clients right up front. It's not an exact science. So when somebody says to me, oh, but they qualify for $250,000 or something like that, keep in mind when we're doing pre-qualifying, when we're trying to find out what someone qualifies for, we're backing into, based upon their income and based upon their debt, how much is left to pay a mortgage payment. Now, included in that mortgage payment, as you and I both know, is insurance and real estate taxes. Well, when they don't have a house yet, I'm totally guessing. Any lender, we're totally guessing at how much is the insurance going to be on an average house in whatever market, they happen to be buying in. How much of the real estate tax is going to be in whatever market? If they're buying down in St. Peter over in Tampa, the real estate taxes are higher than they are in Pasco County. So, my numbers are going to vary a little bit. So when somebody says, oh, well, Wells Fargo or, Navy Federal Credit Union gave them a pre-approval for $300,000 and you're only at $250 or something like that, probably a reason. So just talk to me and I'll tell you about it. So let's take a look at some numbers.
Usually this is my favorite part of the show, numbers, but this is a morning show today. I love, me, I'm just lay it out there. I just tell people the truth of how I'm feeling, and it's the morning. I don't want to look at numbers right now.
He is so not a morning
I am
person.
not. You can call me at 12:30 and I'll pre-qual you and run through the numbers and I'll be like, look at this play. Throw me the numbers at 9:30 in the morning. Yeah, it's not good.
It's not working for Barry.
No.
All right. So we're going to walk you through kind of what we do and how it works, just to give you some sort of an idea.
Yeah, and then we're going to talk about the impact of this rate environment we're in.
And how it impacts
how it can
these
change.
numbers.
Yeah, and what's
All
going
right.
on with rates.
So
Because
just
I know that's what you all want to hear about, what's going on with rates.
So
Or
just-
they really want to hear about what's dropping.
are you done?
Sorry.
Should we keep going here? Or
Probably.
Should
Because
we
if
stop?
you don't know, we're going to have to go to a break soon, but,
Okay.
Yeah, so guess what?
It's time for. I was going to
Time
say
for a
maybe
break.
we should do that
so
before
I'm
we get
glad
into the
you got
numbers.
to how much we qualified for. We'll get to the numbers. We'll get to the rates. We'll be back right after this, so stick around.
And finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
right, we're back, everybody, talking about what's dropping.
No. Not everything that's dropping.
Well, you know what? The good news is with the what I pre-qualify for is not dropping unless I add more debt.
That's right. You know what? Good point. So what he means by that is what's dropping is interest rates, which increases what people qualify for.
So
we wanted to take a look at these numbers. Yeah.
Go for the numbers.
So let's start first to bring you up to speed where we're at. Okay, so this is how we do it. So we take a look at what the person's income is. Everything is on a monthly basis. And as Barry said, sometimes they forget to tell you about this 1099 income or whatever else, which is why we need the documents, why it's really important to give us the documents.
You know what's so funny? They think that 1099 income's helping them until they wrote off more than the income.
I know. And they just used the top. Oh, I have this 1099 income for $20,000.
Yep, so I made
Meanwhile, they wrote off $22,000 in expenses against it.
Yeah, it's a problem.
Now we have a $2,000 loss that we have to take against them.
I hate when that happens.
And it does happen. So that's why if you just get these pre-approvals from some of these people, and I'm not saying any bad names, but some of these online places.
Fargo. Sorry.
I was thinking more. What's the speedy one?
Yeah.
Anyway, they don't
John
look
sang
at
about
things,
them.
and they don't ask
I think
questions.
it's going to be a long, long time. Oh.
Anyway, all right, so back to numbers.
the
We
song?
get so distracted. So yes, I know that song.
Okay.
Anyway,
I'm a rocket man.
let's take $5,000 in income. Let's just take somebody. And again, we go on a monthly basis, take whatever their income is. Again, we're going to figure all of the income out. But let's say a person has $5,000 a month in income. And their
pretty good
debt, that's a pretty good chunk of change.
Pretty
Their
good.
debt, they have a car loan of, say, about $400 a month. Maybe they have either a personal loan or student loan, something like that, of $150 a month. And then all we use is the minimum payment on their credit card. So they have a handful of credit cards, the minimum payment 25, 35, 50, whatever it might be, but it tallies up to the minimum payments $200 a month.
You know, it's so, you're talking about the cards, minimum. A lot of people think, well, I pay this much.
And they do. They'll say, I pay $100 a month.
But, we go by the minimum.
The minimum payment.
Minimum.
Right, because we want to qualify them at what they have to do. This is what they're.
Just want to make sure we're
have
clear on
to
that.
obligations.
I wasn't sure how that worked. So.
Right. Now that's all that we do. I have people.
This is my way of prompting her to give you more details.
If there was, then this is where we will question them. Do you owe the IRS?
When
Are
she
you in
says
a payment?
she means her.
Are you in a payment arrangement with the IRS? Do you pay alimony? Do you pay child support? That kind of thing, because those things factor in. What does not factor in, we said once before,
can I
is
ask you
things
a
like your
question?
electric bill and your insurance bill and things like that.
How do they know, when I say they, meaning underwriting, quality control, whatever, how do they find out when people don't say there was a divorce or alimony? How does that come up later?
Fraud reports.
Yeah. So.
Fraud reports, because it's in public records.
Yeah,
and they run fraud reports.
And years ago, none of those things, even if you didn't tell somebody you were divorced,
right,
or you had a child that
or
you're
you
paying
paid alimony or child support, yeah.
It may never come up, but now in today's world, it definitely
does.
shows up.
And
that hurts what you qualify for.
It does.
So tell them everything.
Yes. So that is absolutely going to factor into the numbers. And we do have that. The other thing is they look very closely when we ask for bank statements and things. They'll look very closely at that. And if they see on the last 2 bank statements that we have, or the last 3 bank statements that we have, that there's a payment of $500 every month going to, Heather Smith or something, they might say,
they're going to question it.
Who's Heather Smith?
Or,
and why are you giving her $500 a month?
Or if there's a consistent maybe credit card payment that didn't show up on credit.
Right.
Because that can happen too.
Right.
It's not often, but maybe, I don't know.
Yeah.
Things can happen.
So they are looking a lot more at things than they ever used to. The crash is, still alive and well inside of inside of underwriters' heads. So inside of everybody.
We want to do good loans. We don't want to do good loans.
And we don't want to put anybody into something that they can't afford. So that's
Right.
why these things are real important. So anyway, so
Back to the numbers.
And that's why we have debt to income ratios, and that's what I'm talking about.
Hey,
so
look at that.
The debt to
We're on a split
look how
screen.
fancy we are.
We are fancy. We are so cool.
So this debt, the car loan, the student loan, the credit card debt totals up to, let's say, $750. Okay, so this is just rough numbers. Debt to income ratio. So the reason why I said that we only count these debts in, and alimony and child support and IRS payments, things like that, installment loans, we do not count your electric bill, your cell phone bill, your phone bill, your water bill, your car insurance bill. We don't count those things because those are factored into the debt ratio already. So what we do when we're pre-qualifying somebody, we're going to take that monthly income back up to the top of the page there at $5,000 a
And that
month.
month, when you say $5,000 a month, that's gross.
Gross, yes, absolutely. Good point. That is before
I
taxes.
wasn't sure, DeLynn. I just wanted to make sure I'm very
You're
clear.
right. I should have said that. Gross income. We are going to multiply that by 45%, which is the maximum allowed debt ratio. You've heard those phrases before, because the rest of that 55% of that $5,000, that's what is going towards their FICA taxes, their Social Security taxes, their car insurance, gas in their car, food on their table, their electric bill, that kind of thing. So that's why we're only using 45% of that gross monthly income. And out of that 45%, in this example here, you can see it totals $2,250. That is the maximum amount that we have to pay all those debts above, the car payment, the student loan, the credit cards, as well as the mortgage payment, including their taxes and insurance and such. So if we take that $2,250, subtract out the $750 from above, the debt, that leaves us $1,500 for a mortgage payment, which has to include the mortgage payment, the principal and interest, the real estate taxes on the house, the insurance, the flood insurance if there's flood insurance, and the HOA fee, monthly HOA fee if they're buying in an HOA.
So this is
Dun,
why
dun, dun.
you always say it's a guess, because obviously until they've identified a property,
Right.
that HOA fee
We
might
don't
be
know.
more, could be less.
Might be
The taxes,
$200 a month, might be
The taxes could
50
be
a month.
more.
And the real estate taxes, exactly.
Yeah.
So those are the things, and it will fluctuate. So what we do on our end, so we have $1,500 that we know that has to pay the mortgage payment. So I'm going to estimate, depending upon where they're buying, I'm going to estimate about $100
That's
a
a
month,
pretty big HOA.
which is $1,200.
That must be like a
You're-
townhome or a condo at 150 a
It
month.
could
I'm just
be.
saying.
So I usually estimate around $100 a month for insurance, $1,200 a year, which is pretty average. $100 a month for real estate taxes, again, pretty average,
And
kind of
of
middle
course-
of the road. But if I know they're buying in Tampa or something like that, and I will ask the question, I will most of the time, if a realtor referred me, I'll say, well, or even the clients, have you looked at any houses on the line that online that you like? Yes. What were the taxes on that house? We really like, River Ridge area. What are the
Right.
real estate taxes on some of the houses that you looked at? I mean, I do try and get as close as I can to what a realistic
area they're
number,
looking at.
right? The area,
Okay.
because the taxes and the HOA fees,
So all of this plays in. All right.
all of this plays
So
in.
now that we know things are dropping, we're going to look at what impact that'll have on your pre-qualification amount right after this.
Dude, I got this cool.
Consumer advocate, your host, and the consumer quarterback, Brandon Rhymes.
All right. We're back talking about how much do I qualify for?
Bottom line. So now we figured out the income, we figured out the debt. We're down to estimating some taxes and insurance for approximately where they're buying. So
There's
we're
the
down to the
keywords.
bottom line. Estimating keywords. So that leaves us, after we subtracted all that stuff, $1150, which is remaining for principal and interest. In a financial calculator, you plug that in. Just estimating, I have down here an interest rate. Clearly, I made this form a while back. An interest rate of 4.5% over a 30-year term means that they can qualify for a loan amount, not house, but a loan amount of $226,900.
Loan amount meaning doesn't include the down payment.
Right. To that, they will add their down payment.
Right.
If they have, $10,000 to put down, then they're looking at a $236,000 purchase price.
And that didn't include any MI. So if that was
right.
If it was FHA, we'd have to add that in there. Which is
why, again, it's all estimated numbers.
Or if they're putting less than 20% down on a conventional. And the other part that comes up all the time, they're like, well, there's no homestead on the taxes. The taxes are going to be lower. Remember, we have to go by what's on the current tax roll.
What's in place the day we close.
Yeah, so that's important. People know that. I think people think, oh, the tax. My
well,
realtor said the taxes are going to be lower.
I know. I hear that all the time.
I'm going to tell you, because of the caps and so forth that are in place, these programs, a lot of times they're not lower, even if it doesn't,
I know.
I mean, I know on my place, I thought it was locked in on a cap, but even when I put the homestead on it, it was a total wash. So, because rates, the
taxes went up.
When the mill rate goes up, it affects the tax.
That's it.
All right, so let's talk about
let's talk about the rates.
Rates are dropping.
Yes.
We all know
that's the good news. Rates have been coming down. Everybody, the funny thing is, say we all know that. We're all like being surprised by that because what was the anticipation?
Well,
I can remember doing this like last December.
Yeah, so if you don't like it,
rates are going up. Rates are going up. Guess what? They didn't.
They did. Last summer we were over 5.
We were over 5% last summer.
Now we're starting to see stuff in the 3s actually. And
is that crazy?
And there's a lot of things that play into that.
Yes.
And I know you're going to show what difference it makes on your pre-approval amount or pre-qualification, how much it can impact on when rates. But there's a lot going on in the market that you should understand. I mean, the Fed is going to meet. This is July. There's an expected rate cut. That is a short-term rate cut. Does that mean mortgage rates are going to drop? Not necessarily.
Right.
That doesn't have anything to do with it.
And people hear that. That is the FOMC. That is not mortgage rates.
The pressures are on. There are political things that play into this. The Fed Reserve meets and they look at the economy. What's going on? Well, there's a little bit of a slowdown right now, so that can push rates to be lower. Well, it is an election year coming up. Campaigns have... if you don't like it, I'm sorry, but it's kicking off again. So for the next year and a half.
And it affects the market.
Yes. So President Trump is pushing for lower rates because it makes the president look better.
Good.
When you have a strong economy, I got low rates.
You can go back for years and you can look at the trends every time.
And
this
Trump
is what
tweets
happens.
about this. And he's trying to push the buttons of the Federal Reserve to go ahead and lower short-term rates.
And mortgage rates are driven by, so that the bond market, the 30-year Treasury bond and the 10-year Treasury bond. Those are the two key indicators that drive mortgage rates.
So, and the other part is what else affects your rate? Well, down payment. It's a big part. People think, well, I saw I could get 3 1/4. Well, did you have 25% to put down?
Yeah, 25 or 30% down, and an 850 credit score.
Yeah, did you have an 800 credit score? What market are you buying in? The zip code can affect it.
It's no such thing anymore of just calling and saying, what's your rate?
Yeah, it just doesn't work that
way. It doesn't work. That's the old days.
What loan program are you going into?
Different loan programs, different down payments, loan to value,
all
loan
those
sizes.
Things play in. We could do a whole show on that.
Right.
Show me, DeLynn, what happens? Rates drop.
Right. So let's just take a look. The other thing that happens is when the interest rates go down, that means what does go up, not everything drops, what does go up is your qualifying. Because at 4.5%, like we said, at 4.5%, that person qualifies for $226,000 loan.
What if rates drop?
But if the rates go down to, let's say, 4%, look at the bottom of the screen there. If the rates go down to 4%, that $226,000 just goes up to $240,000 because the payment now gives them more loan amount because the payment that we're qualifying them at didn't change.
So a half
It gives them
percent
more
on
house.
that loan size gave that buyer $14,000 more
Buying power.
That's pretty awesome, though.
It is.
And that's what helps drive up the real estate market, let's face it.
And look at what happens if what President Trump is talking about, lower rates, lower rates, lower rates. What if it goes all the way down to 3.5?
I like it.
256,000. Again, that same person, their income didn't change, their debts didn't change, their payment didn't
259.
change. How much money they can get for that same payment is what changed. Now they qualify for about $259,000.
Wow. So let's hope that rates continue to go down. That'll help drive up the real estate market and
Yes.
help our buyers get more house.
Right.
Or the other side of the equation is maybe just have a lower payment.
Right. Right. If they did stick with the 226, now it's just going to be a lower payment, which is nice.
I love it. I love it. All right.
You're not quite done.
I know. We got to wrap up here. So,
But I'm done with the numbers.
all right. All right. Can I do my Barryism
Yes.
for the week?
Do it. Go.
All right. But let's do our community events. July 9th coming up.
Yes.
We have our Lunch and Learn.
Yay.
It's over at Carrabba's, 11:30. Actually, we're going to be doing into August. So
Actually, yes. No. Nope.
I forgot.
We're not doing July 9th. We're doing August 13th, I think it is.
it's something
He's
like
checking.
that. August 13th.
And I'm very excited about
I am
this
too.
lunch
We're
and
going to talk
learn.
about crime, baby.
You know, you guys, we listen to your
I
surveys.
do the rhyme, you do the crime.
We listened to your surveys, and one of the things we had Commissioner Jack Mariano with us a couple of months ago, and people were asking about the crime. The crime. What are we doing about the crime in Newport Richey? Guess what?
We got Chief Bogart. We
Chief
love it.
Bogart.
Tim Bogart will be our guest at the Lunch and Learn.
Yes.
August 13th, 11:30 at Carrabba's.
I told
Let
him
know
we
if
want to
you're
know about
coming.
crime. He said, "I'm your guy."
Yes. All right. So let's do Barryism for the week.
Go with
Here's
your
my
Barryism.
Barryism. Learn to work harder on yourself than your job. What do you think of that?
I like that.
I like it a lot.
It is.
I like it a
lot.
I like it a lot. So work on yourself. You know, it's great that you have a great job and, work on yourself.
Good one.
Be all you can be. Oh, that's the Army. We can't steal that one. Anyway.
Been used.
It's been abused. Anyway, if you like our show, share it. If you don't like our show, share it anyway.
We hope you like it, though.
Yeah. Thanks for watching, everybody, this week. We're out on social media, so, help spread the word. Forward this if you
Comment.
got any email.
Comment,
Yeah,
forward,
comment.
like,
We
all
like
that
it.
fun stuff.
I like when I
And
get
yeah,
the
tell us
personal
if you,
messages.
give us some feedback.
And let us know what you want to hear about, because we want to talk about, because we'll talk about anything.
We're
We
all
don't
about
care.
education. If we're all on the same page, and everything goes much smoother.
That's right.
Thank you, everyone, for watching We Are Today and Every Day.
Moving forward. See you next week.
Bye-bye.